The next Fed meeting, or the next announcement following a Fed meeting, will be on Wednesday, September 18th. We're recording this a few days ahead of that, so some of the commentary, is subject to change. But I think for the most part, barring any major economic developments, the advice should hold going forward. When I last looked at the projection that the futures markets were putting on the shape of rates going forward, markets are predicting more or less about a 97% chance of a Fed 25 basis point cut, a quarter of a percentage point. The remainder is pretty much would be looking for a 50 basis point cut. So let's call it 100% discounting of a 25 basis point cut. And that usually means that the market gets what it wants. The Fed is not really in the business of disappointing markets too much. They've been guiding toward in ways that make investors think that a 25 basis point cut is in the cards. And I just don't see the Fed doing anything too crazy in that regard. Remember, the Fed also is a bit under siege. I personally can't recall any situation where they've been under this sort of intense scrutiny or intense criticism that they've been undergoing from the president. Normally, presidents try to keep their criticisms of the Fed moderated and respect the institution's independence. But then again, we have a president who is not big on historical precedent in general, and this is one more thing. I think a lot of his viewpoint comes from the fact that the president has spent his life pretty much as a borrower. That comes with the turf. If you're building major commercial real estate projects, you're borrowing money. That's how they get financed. And so if you're a borrower, you want to see lower interest rates. If you're a saver, that's not a good thing. You actually want to see somewhat higher interest rates because you'd like to get a nice return on your savings. And this way there's a risk-free alternative. You're not forced into taking riskier and riskier bets to achieve a rate of return. So the Fed has to balance those interests, but the person with the biggest megaphone is someone who, is sort of predisposed to wanting lower interest rates. A lot will depend on the commentary that comes out after the meeting. The question will then become, will the Fed basically indicate that they're one and done, which is not a term that they'll necessarily use, but do they indicate that, we've cut interest rates twice in the last two meetings, here's what you're going to get for a while, or do they indicate that there's a path forward that would lead to further rate cutting? I tend to believe that they're going to be data dependent, and that's going to be a term that you hear a lot. And what data dependent means is if things stink, we'll cut rates. If they don't, we're not. And I don't know that the market will be satisfied with that because remember, with the inversion that we see in the interest rate curve, the market's pretty much pricing in between 75 and 100 basis points, another 0.75 to a full percent of interest rate cuts over the next year and a half. So that would be my big risk. If the Fed really doesn't indicate that there's more monetary accommodation coming, that there are more interest rate cuts in the near future, that could disappoint the market. And that would be the big thing to watch, especially if we're going in with some momentum to the upside. That's usually the sort of catalyst that tends to reverse itself depending on which way the markets are moving. That would be my advice and things to look for next week.